Hi, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vase, coming to you live from Riga, Latvia, from the BitFury office. They have a new office out here. Probably not the best camera placement. I think there is like a white wall with a white shirt. Isn't really going well on camera, but I wasn't going to spend 20 minutes repositioning all of my gear. So this is what it's going to look like. I'm going to test out actually what it's going to look like. Yeah, that's not the most ideal thing in the world. So we should probably get to screen share. The sooner the better. Let me go ahead and just go straight to screen share and working with one monitor. So let me situate here. Don't know if I get to see any of your live comments. I think everyone in the US is like asleep. I don't have anyone doing questions at the moment. Let me organize this a bit. Yeah, this is better. And I don't want to chew up bandwidth. Oh, wait, why can't I? That's interesting. Hold on one second. Sorry, guys. Yeah, this is what happens when you are running your own live streams. Why can't I pop out? I'm trying to get to the chat. I want to make sure that my audio and video are all working properly. I guess one of the drawbacks. Here we go. Excellent. I'm going to just glance at the chat real quick to make sure the audio and video are working. All right, everything looks good. Beautiful. All right, let's just go straight to screen share. I don't want to do this too long. I actually have like so much work to catch up on. These conferences really take a lot out of you if you have to talk to a lot of people and you really fall behind on actual work. And those of you that don't believe me, I have actual work. Wait, that's probably not what I should be displaying. Let me, where's the trading stuff? There we go. Okay. All right, here's the workshops. Here's the latest stats on the workshops. Have about 10 seats left in Amsterdam between both workshops. You may want to get that seat. About 5 to 7 people are going to want to register on the last day, like on Friday or something. So you want to get your seat before that. I can't believe I'm going to sell out both days in Amsterdam. It's absolutely amazing. After that is Chiang Mai, Singapore, Perth, and Melbourne. Melbourne, get it right. Full schedule, we've added a second day in Sydney. So keep that in mind, sold out Sydney, so needed to add another day. And the conference is coming. There'll be a conference announcement probably going into the weekend. So keep that in mind as well. Education, haven't shown this in a while. Please learn trading. I'm trying to help you. I'm gonna make this a nice fancier page one day when I, again, find the time. And that's it. And hey, if you guys like this channel and wanna support this channel, please use the affiliate page. Even if you're gonna do your Amazon shopping, just click on any of these links. You may have to refresh the page twice if you have an ad blocker. Click on any of these links. I really recommend these particular gadgets. It's the gadgets that I use. A lot of research went into these things before I bought them, and I gotta add like a full book list and stuff. But yeah, like BitMax, save 10%, TorGuard 50%. Don't have a discount code for TradingView yet. I gotta go to their office in New York and talk to them. Yeah, so go ahead and check these out. All right, let's go to the charts. The monthly chart, we had another day of updates. The latest price on a month-end basis is 6,580. If the monthly chart closes above 63.88, it's not good, but it's also not necessarily bad. If your monthly close is the lowest monthly close for the year, it's bad. I'm actually going to turn the camera. It's distracting me. Okay, better. So it just looks bad, right? I still have not seen anything based on a monthly outlook. I'm going to just go to the price, right? I have not seen anything on a monthly outlook that tells me to think anything different than the 2014 bear market, right? The 2014 bear market went, let me make this visible. The 2014 bear market went into the trend line, and then you see how it got squeezed between the trend line and the 30-month moving average. We have not even gotten to the combination of trend line and the 30-week moving average. Notice right here, the horizontal purple line is the 76.4% Fibonacci line, and it touched the 30-week moving average, and the price bounced right off of that. That was a very strong bounce. The price bounced from approximately $285 all the way to just under 500. That was almost 100% bounce. As you can see, we have not yet crashed into the 76.4% Fibonacci line. And in about 2 weeks, you will have the 30-week moving average touching the 76.4% Fibonacci line. So technically speaking, if we compare the current environment to the environment of 2014, and I'm not looking at your live comments, guys, but I don't want to hear nonsense about how the fundamental environment is different than it was in 2014. The fundamental environment is irrelevant. We are not looking at a chart of fundamentals. We are looking at a chart of technicals. As you can see, it took us 2 weeks. We broke down. We broke down below the 62% line. I'm trying to get this to be visible. There we go. We broke down below the 62% Fibonacci line. And then it took us 2 weeks to reach the combination of 30-week and 76.4%. We are sitting below the 62% Fibonacci line. As you can see, in 2014, we spent only 1 month below the 62% Fibonacci line, and that was the month of April. We have spent significantly more time in the current bear market below the 62% Fibonacci line. This is bearish. This is not bullish. This is not a good thing, okay? Like I keep saying, the current bear market is actually weaker than the bear market of 2014. Does it mean we're gonna go lower by percentage? I don't know. But what I know is that we are in a weaker position. It only took us 2 weeks to get from 62% Fibonacci to 76%. As you can see, we are already in this zone. We've been in this zone, right? So for us to go down to the 76.4% Fibonacci line is not going to take a lot of effort. We did it in 2 weeks. So if you compare in 2014, in 2 weeks, you went from above the 62% Fibonacci line. What was the opening of this candle? This is the candle. This is the monthly candles, guys. On September 1st, the price of Bitcoin at the open was $475. Within 2 weeks, the low came in at 286. So from 475 to 286, you dropped $200 on 275, right? So that's approximately 40%. So you dropped 40% in less than 2 weeks because it rebounded back in the second week, right? We are already starting from a lower starting point. The equivalent to what happened in 2014 would be a fall from about $8,000 down to $4,800 in just 2 weeks, okay? That would be the equivalent of a 40% drop. We don't even need a 40% drop. We only need a 30% drop. What do I think a realistic probability is of touching this area, but in the current point in time. The combination of the 30-week moving average and the 76.4% Fibonacci line was literally in between October and November. And that's exactly what's going to happen again. It'll be in between October and November, maybe it'll be November, right? So I think in October, we're gonna fall to $4,800, like below 5,000. Now, obviously, I expected this to happen back in July when we had a full-blown candle that opened and closed below the 62% Fibonacci line. I thought that the following candle was going to take us down to 5,000. The following candle was a rebound into the trend line. That's okay. The 5,000 target simply got delayed based on time. It did not get affected at all based on price, okay? I'm one of the only analysts that predicts both time and price, okay? These are because I take on that challenge and I don't shy away from it. So I'm still looking for this purple combination, and I think we're gonna touch it next month in October. It's very, very critical, very important. Okay, I'm 2 videos behind on Hyperwave. I'm not gonna talk about it. Here is the stop and reverse points. And oh, you know what? Sorry guys, I wanna take a look at the momentum oscillators. This is not good. This is not good. Your RSI is at the lowest level it's been in 2 years. 2 years. The last time the RSI has been lower was literally in January of 2016. It's the last time your RSI was lower. It was January 2016. It's almost 3 years. We're already at the end of September. So it's 2.5 years since the last time the RSI has been this low. That's bearish. There's nothing bullish about that. That's bearish. Your monthly MACD crossed over and it's bearish. How long was the MACD crossed over last time? Last time the MACD crossed over in July to the downside. And it crossed over to the upside of November the following year, okay? So that was July that it crossed, right? This time your MACD crossed over in June. So October of next year, I mean, this is just getting started, okay? Again, I'm comparing apples to apples here, right? I'm comparing Bitcoin to itself, which is a reasonable comparison. Let's see how the comments are doing. I'll try to remember to scroll back at the comments every now and then just to see if there are any good tipped questions, but can't guarantee that because, like I said, I'm working with one monitor here and things tend to get complicated. All right, let's move on. No, not this one. Here is my bread and butter chart. We are falling under 6,400. This is not ideal. This looks very bad and very ugly. I'm kind of tempted not to open my conference for sale. It's not really my conference, there's other people involved. Not to open the conference for sale until October because we are going to denominate conference in fiat. It's just easier that way instead of denominating in Bitcoin. And hey, I want people to pay more Bitcoin for, you know, $500 or $1,000 ticket because, hey, expenses are in fiat, right? I mean, we have to pay for expenses to do the conference. And yeah, this is not good. There's nothing else I can say. There's really no other things I can point to. I have the target. This is the first target. This is the most optimistic target. Don't forget, you see where this setup trend line is? That's actually at 4,100. That's way lower. The Fibonacci line is approximately where this line is, maybe a little bit lower. I'm not sure what this line is. This was the old trend line. I don't really want this thing. I don't really. Oh yeah, that's right, because I told we're gonna. Yeah, I'm gonna drop this. Like, I'm trying to make these as clean as possible. I don't want to draw too much. So yeah, this moving average is gonna drop so quickly starting next week. It's gonna be crazy, and this is a classic descending triangle. I mean, they don't break down 100% of the time. That's ridiculous. I believe they break down 70% of the time. That's it. So you have a huge probability on your trade. And I mean, I don't have to say anything. If you understand technical analysis, you know this is bearish. And this dead cat bounce, how many dead cat bounces have we had? Well, I don't consider this first one a dead cat bounce. I consider this first one a reasonable rebound, potentially taking us back to new all-time highs, and it got rejected. This is the first dead cat bounce that took place in April. The entire month of April was a big dead cat bounce from the 50-week moving average into the 30-week moving average. The second dead cat bounce was from the bottom of the triangle in June, and that went into the death cross of the 30-week and 50-week moving average. That was the second dead cat bounce. And that took place June and July. Started in late June and lasted until late July. Then we had a third dead cat bounce that started in mid-August and went once again from the bottom of the triangle of 6,200. And it did not even get to the top of the triangle. It did not even get to the 30-week moving average. So the third dead cat bounce was weaker than it could have been. I thought it can make it all the way to 7,500. I thought 7,000 was the most. I mean, I didn't give this thing any credit. It had room to 7,500 and it didn't even make it. I believe the fourth dead cat bounce has just been completed. And I thought it had a chance to go to up to 7,200 into the combination of declining 30-week moving average and the top of the triangle downward trend line. And it again was, the dead cat bounce was weaker than it could have been. And now it's in trouble. Can there be another dead cat bounce from the $6,000 to $6,200 area into the top of the triangle, which will probably be 6,800 or so by mid-October? It's possible, but then you would go higher, potentially higher than the current dead cat bounce, and then it creates complexity in your analysis. So this could be it. It's unfortunate. I really should sell some more Bitcoin. We already paid for the venue in Vegas in fiat, and I need to cover that with Bitcoin. Was hoping to, like, for Bitcoin to maybe make it to 7,000 before covering expenses of the venue, but there's no way in hell I'm gonna let this hold. For example, I am not risking 6,200. The moment the price of Bitcoin goes below 6,200, need to immediately hedge. I will be immediately hedging all of my fiat expenses for the rest of the year, whatever that is. I'm not going to talk to you guys about my fiat expenses for October, November, and December, but I will absolutely be selling whatever Bitcoin I have to hedge my expenses for the rest of the year. Now, if Bitcoin immediately goes from $6,000 to $50,000 between October 1st and December 31st, so be it. It's fine. I'll be the happiest person ever because the Bitcoin I still have in cold storage will make me more than happy. But there is no way in hell I am taking a chance of a 50% drop of Bitcoin in the month of October, because that is a reasonable expectation when this descending triangle breaks, because when a descending triangle breaks, this is your target, okay? Now that target could be achieved in 2 weeks, and that target could be achieved in 3 to 6 months. I don't know, nobody knows, okay? I think that we will drop to 5,000 fairly quickly. Then I believe we will bounce back to the $6,000 to $6,200 area. And then I believe we will approach 5,000 one more time and have an additional significant drop, probably down to the $3,000 area. But we will talk about that when the time comes. For now, I am diligently watching the bottom of this descending triangle. This is not sounding any alarms. If you have an expectation and that expectation is happening, you are mentally prepared for what's to come. And people that are not mentally prepared for the potential of a $3,000 Bitcoin price, their businesses will fail, their crypto businesses will fail, their savings can fail, their lifestyle can fail. I have adjusted my lifestyle not only to prepare for a $3,000 Bitcoin, I have adjusted my lifestyle over the last 6 months to prepare for a $1,300 Bitcoin. And if that doesn't happen, I will be the happiest person in the world to be wrong. But if I'm not wrong, if I'm right, if Tyler Jenks is right, if Willy Woo is right, if we are right, we are mentally and financially prepared to deal with a $1,300 Bitcoin. And if you and your business are not mentally and economically prepared to deal with a $1,300 Bitcoin, you are in trouble. Okay, this has nothing to do with trading. This has to do with lifestyle. Okay, let's move on. Here's the daily chart. The daily chart is going below this purple channel, which is a very historic channel. You know what? Let me glance at the live chat, see if anything interesting showed up. Give me a second. I don't even know how many viewers we got. I guess the downside of having multiple screens. Hope we have 1,500 again like yesterday. So anyway, here's the daily chart. Let's zoom in. Oh, wait, I'm sorry. Let's go back to the weekly chart. I want to take a look at the oscillators. I haven't looked at the oscillators in a while. This red line, we can adjust it. We can make it a best fit line. As you can see, you bounced off of this line. You went below it. You bounced. You tested it from below. You then tested it from above and again, and you're now coming up to this line. It's not ideal. It's not the easiest pattern to read, but it's bad. It's bad. The RSI is not very useful. Let's look at the MACD. The MACD is kind of useless right now. It's flip-flopping back and forth. Not really a good metric. So let's get back to, let's go back to the daily chart. The daily chart is on a price flip. As I warned people, the daily has not been as clean as the 12-hour. It's been difficult trading the daily using the sequential system. I'm not going to lie to you. And here's your price flip. A price flip is usually not when you enter positions unless it's immediately following a 9 reversal. In this case, there was no 9 reversal. We did not even make it to the 128-day moving average. This shows you that the price is even weaker than it could have been. You have 3 moving averages. They're all trending down. They're all below each other in sequential order. Your price is below all of those moving averages. You are dangerously close to the swing lows. With every swing low you take out, there is a higher probability that the panic will accelerate. And based on the sequential system, tomorrow, if a red 2 goes below a red 1, you can execute the short trades. People keep asking me, do you wait for that candle to close? The answer is absolutely not. because I mean, there was even reasons to go short on this price flip, because I guarantee you the 12-hour chart told you to do just that. And we are gonna, maybe I'll look at the oscillators. Let me see if there's anything interesting here. The RSI is not useful at all. Your CMF continues to downtrend. This is bad. This is really, really bad. Again, I'm simply drawing a best fit line and I'm just extending it. The next time there is a big drop, and I want to make them parallel, but I know they're not. The next time, maybe I could make them, again, best fit line. You want to draw your best fit lines. And this is not good. It's just not good. You swung high a little bit here, but it's not that high. You're just in the positive territory. I think once another capitulation sets in, things can go bad. Your MACD is not very good. You have a third lower high. If you take out the low, that's very bad. Nothing good on the MACD front. That was your daily. Your 12 hours, so much cleaner. Like I said yesterday, you had a short trade as of, let's expand this and this. You had a short trade as of this red line. That's when the red 2 started trading below a red 1. You have now set a break-even stop loss. In the beginning of the current 12-hour candle, I would have set a stop loss to the top of the candle. So we only have 1 hour and 25 minutes to go in the current 12-hour candle. At this point, I would be setting my stop loss into the middle of this candle. My stop loss would now be, it would probably be around just under 6,500 or just over 6,500. 6,505 would be my stop loss at this point, and the short trade should have been entered based on the 12-hour chart at 6,700-ish, okay? Initial stop loss would have been at 6,840, and but now your stop loss is significantly lower. Now, what am I expecting? Well, you only have 4 more candles, and then you get a 9. If you get a 9 at the combination of my red line and the setup trend line, the dotted line, that could lead to a 1 to 4 candle bounce to the upside, and then the resurrection of the countdown to the bottom. That's what I see. I think we will fall to the $6,200 area, $6,250, bounce back to maybe 6,500 or lower. And then once we break 6,200, sometime early next month, it can get real ugly real quickly. So here's the 4-hour chart. As you can see, the 4-hour chart would have been a little tricky to trade. You had a 9 at the low, and then the 1 candle went significantly lower. Normally, you should not be trading the 1 candles after a 9. If they continue in the same direction, you want to trade 2 below 1 below the 9, but that would have overextended you. So the 4-hour chart would have been tricky to trade. I probably would have stayed away from it on the 4-hour trading period. Now we can easily bounce back to the $6,500 area and then resume the bear trend. Either way, this is not good. The 4-hour chart is just simply not in sync. Here's a good example of the 4-hour chart holding the setup trend line in combination with the combo 13 and the aggressive 13. The sequential 13 is only on a 10. And I have to assume, so, right, so you had a 9 to the downside here. This 9 let us see, this indicator tells you a lot of information. This 9 on a 1-hour chart that took place on September 22nd gave you an aggressive 13 on September 23rd and a a sequential 13 also on September 23rd. The combo 13 is a very tricky one, and the combo 13 for that one didn't even show up till a few hours ago at the same time as the aggressive 13 for a 9 that took place on September 24th. So we still have another sequential coming off of the hourly 9 and another combo coming off of the hourly 9 that took place on September 24th. Okay, so there's still some to go. You did not, you just missed your 9 yesterday, or actually earlier today, and now we are, why isn't there a number on top of this candle? What's going on? Something's wrong. There it is. We're on a 5 of 9, so maybe in 4 hours we're going to get another 9. But the next one's going to be tricky. The next hourly close needs to be the lowest close of the day. So we'll see if we go below 63.83. Very possible. It's only like 10 bucks away or 20 bucks away. Here's your long versus short. Again, I haven't had time to research exactly what this is, but I like keeping an eye on it. The shorts have deleveraged, which opens up the price for continued falling without people getting rich on that. Ethereum is, of course, falling hard. It's on a weekly 9, but I hate it when 7 and 8 candles are bullish and the 9 is bearish. It's a very tricky situation. I like to think of this as a bearish signal, and I don't expect candles following the 9 to take you higher. That is my experience. However, if you look at the weekly Bitcoin chart, that's not what happened. That is not what happened on a weekly Bitcoin chart back in July. We had a positive 7 candle, a positive 8 candle, and a severe bearish 9 candle. And this told me to be very careful with a 9 leading to higher prices. But at the same time, because we had fallen from all the way from 10,000 down to 6,000, I knew we were overextended. And this is where your technical analysis starts to conflict with itself within the same chart. And this, made it very difficult for me to assess the next few weeks of Bitcoin. And the next few weeks of Bitcoin were incredibly bullish from 6,300 to 8,300. And I called it a dead cat bounce. I called it too dangerous to trade to the upside. Other, even traders that I probably don't even respect were making fun of me that I missed this bull market. But to me, this wasn't tradable. Like, I'm sorry, if I'm playing blackjack or I'm playing poker, and let's say I'm sitting with a reasonable hand, but it's not a perfect hand, it's not a great hand, I'm not going to go all in. If I'm sitting on a 9 against a 6, I'm not going to double down. And you can call me an idiot for not doubling down a 9 against a 6 because you have a feeling and you're bullish bias. But no, that's not the hand I'm going to play. And I did not play this hand to the upside. I remained cautious, and I was okay with that because I was ultimately right. And it's all about capital preservation. And if it's too dangerous, it's too dangerous. You don't do it. So Ethereum is now in the same boat. You had a positive 7 and 8 candle. Your 9 candle is bearish. I will say the same thing about Ethereum, what I said about Bitcoin. I know it's overextended and it fell a lot, but to me, this is bearish. I could be wrong like I was in Bitcoin, and Ethereum may go all the way to 0.06. Ethereum can double in price over the next 2 weeks. And that still doesn't mean anything. It's still in a bearish trend, and it will lose all of that value over the following few weeks, right? But I'm not going to chase it. So to me, this is bearish. And the moment Ethereum goes below 0.0032, it becomes severely bearish. S&P 500, the weekly chart, you have a bearish Harami. Be very, very careful. And there's your daily. There's your daily 9. The S&P is not trading right now. I have no idea where it's going to open in 3.5 hours or in 3 hours. So we will see. I would be cautious here. I would wait for the gap to fill, and then weekly and daily should align to the bullish trend. Gold is not doing anything, not going to waste my time. Silver probably isn't doing anything either at the moment, but silver is incredibly bearish. This is a massive triangle. Silver is on pace to go to $10, and we will reevaluate. How low do I think silver can go? Well, I would look at the price of copper, and I would maybe add 20%. That's how low silver can go, and I would consider that perfectly reasonable. No manipulation, none of that nonsense. Apple stock is hanging in there. It's on a bearish price flip. It's currently in a no trade zone. Let's evaluate, and what happens with the full-blown stock market will have a lot to do with that. I'm not sure why I'm still looking at TSG stock. I guess I'm keeping an eye on it to see if it can make it to a daily 9. Right now, it's a bit in the middle of nowhere. I would not be eager to have a position on it. Ripple is, of course, pure garbage. It's one of the scammiest tokens we have. So I would say out of the top 20, Ripple is my top 3 scams in the top 20 liquid. I should probably take a look at the top 20. I know CoinMarketCap is not the best way to look at them, but I can glance at the top 20. I'm just curious if there's a, oh man, it's got the top 20. Man, it's got competition for scammy tokens. I don't know. I would still put Ripple in the top 3 scams in the top 20. Shit, it's hard. Well, Stellar is Ripple, right? I mean, Stellar is a Jeb McCaleb scam to clone Ripple. So XRP and Stellar are identical. So that's got to be like together as a single scam. IOTA is a total scam. Binance token is a total scam. NAM is a total garbage. I mean, Tezos and Tron and Neo, they're like, you know, Ethereum clones. Dash is, you know, scammy made. Cardano is an Ethereum clone. So like all of the Ethereum clones, they're in the same boat as Ethereum. They're not as scammy as the Ripple token. Same thing with EOS. It's an Ethereum clone. It's the worst Ethereum clone because it's 100% proof of stake. Yeah, I would, I'd probably say the Ripple token is a top 3 scam on this list. I'd probably put Binance in there as well. I don't know what VeChain is, and Dogecoin is one of the better ones. Yeah, that's it. I would put those at number up there. So probably XRP and Stellar, they're together. It's the same thing. And Binance is probably the second scammiest token in the top 20 behind Ripple, Stellar. And I don't know, NAM and IOTA are tied for third. And then we can put all of the Ethereum clones and the Ethereum as the next batch. Then probably Dash. I mean, it's bad. The only non-scams in the top 20 is obviously Bitcoin, Litecoin, Monero. They're useless, but they're not scams. Just those 3 basically. Tether, if they're fully backed, they're not a scam. Even if they're fractionally reserved, but they're open about being fractionally reserved. They're not a scam. It's stupid, but it's not a scam as long as they're transparent. Dash was scammy made, and the whole masternode is scammy. Ethereum Classic is just, another Ethereum. Bcash is, their marketing is scammy, but their token is just, technologically incompetent. VeChain, I don't know what that is, nor do I care. That's pretty much it. That pretty much covers it all in the top 20. There you go. Little detour there from the price. Let me see if I got any comments on this. Yeah, I don't see any tipped questions, so I'm not gonna look for questions otherwise. I'm gonna end this video in about 12 minutes. Let me just go through. It's no idea how many live viewers we have. Let me get back to the price. Oh, before I get back to the price, yeah, guys. Hey, once again, I probably have the maximum number of viewers right now. Please support this channel by using the affiliate codes. They do not cost you anything extra. People have been asking me why I removed Bitcoin donation addresses from my videos and stuff like that, because I find donations to be generally like no one donates, and I'm okay with that, right? Like I'm perfectly fine with that. When people donate Bitcoin to me, they donate so little and so rarely that it doesn't help, right? Like it can only hurt. Like by me having a Bitcoin donation address, I hurt my OPSEC for $20 a week, right? Like I'm sorry, my OPSEC is a little more important to me than earning an extra $20, $25 a week. So that it doesn't matter, right? So I have removed pretty much donation addresses because I mean, I'm not rich or anything like that, but I'm doing okay, and it's all right. Like you don't have to donate to me. It's perfectly fine. Just if you want to support, just use the affiliate links. And I don't even profit from most of them, right? Like I don't take any money from physical objects, right? Well, actually, I gotta check on this one. I have no idea. It's just like, hey, you guys want to buy a miner? Here you go. Legitimate company as far as I know. But I don't take kickbacks from House. I don't take kickbacks from Buy the Dip. I don't take kickbacks from Cryptomatic, right? I don't take any kickbacks. I don't take kickbacks from Cold Card. Maybe, hopefully he'll give me a couple, but I don't take kickbacks from Crypto HW Wallet. I just don't, right? Like I don't, it's fine. Just like take the discounts. There should be a discount here. Take the discount. So that's how you can support, or order from Amazon. I'll take a kickback from Amazon. So please use these links and order you anything you want. You don't have to order these things, just order anything. All right, let me get back to the price. Let me stop shilling, which I don't mind doing. Free content. Where are we at? Ripple. Okay, what is this? What is this? I'm not sure what SY. Okay, so here's an example, right? You had a 9. Now, if you took a chance at trading the 9 to the upside, which would have been reasonable, there was a 9 at the top, tradable to the downside. If you took a chance at trading the 9 to the upside, you should have put your stop loss, worst case scenario, below the low. And that stop loss would have already been hit. And now you're a little overextended, but I don't even know how this ended up here. But either way, I'm not gonna show this here. This is bearish. You have a chance at a moving average reversal. You could go down to a 13 for a reversal. And if you get a red 2 below a red 1, that's bearish. That's the daily chart. The weekly chart is, crazy bearish. Weekly chart is only on a 3. So what, 6 more weeks of downside? All right, I think people asked me to look at Tesla and maybe something else I already forgot. Tesla and Amazon. I'll take a look at those, and then I might call it a day. I haven't looked at Amazon in a while. Let's take a look. Earnings season is coming up. I'll be paying attention. Here's Amazon. Amazon is not tradable right now. I wouldn't trade it. So here's the, yeah, that makes sense. Like, look, it topped on a 9. I warned everyone right here, right? And this is the proper way to trade it. 9, gap up, price flip, never gave you a bullish entry either. 2 above a 1, above a 9, never happened. Short trade at a red 2 below a red 1. There was a bullish trade here, but I would have waited for the new all-time high. Here's our trend line slash potential phase 4. So this is going to get very interesting, right? This is Tyler's phase 4. And we don't want to see Amazon go below it, right? I mean, Alibaba is losing its CEO, so that's not really competition. I would be nervous about Amazon at the moment. Maybe it'll have good earnings, but be cautious. The setup trend line is holding. You have a red 1, you'll need a red 2 below a red 1. That's a big drop down. Let's pick the Amazon up again next week. I would not be in Amazon right now. It is not worthy of a short, and it is not worthy of a long. I will say that if Amazon dips below 1850, it could be shortable. It could be in line for a serious correction. And right now, I would go long Amazon above 2000. So as long as it's between 1850 and 2000, I don't think Amazon is very tradable unless you have very specific earnings strategies or earnings knowledge. Do I care about the daily? Or this is the daily. Let's take a look at the weekly. Oh, so this trend line doesn't matter on the daily. It needs to be there on the weekly or the hyperwave line. It's holding on the weekly. It needs to stay above this line on a close basis. And the weekly has price flip, no trade. So Amazon, you should not, I would not have any positions on Amazon right now. Let's take a look at Tesla. Here is Tesla. Tesla is also holding the setup trend line. Tesla is on a weekly red 5 of 9. It hit its sequential 13, nearly at the high, at the recent high. And Tesla is also not tradable, right? If you were in the bearish trade as of a red 2 below a red 1, that trade is now back to break even. I would be cautious. Next week, you'll probably get a weekly price flip. Tesla is also holding one of its phase lines based at a second phase line. So it still needs to accelerate into a third. Tesla is also on a no trade currently. I would not mess with Tesla. You can look at it on a daily level. Beautiful bounce off of a 9 at the low. I wasn't paying attention. If you have this indicator, hopefully, you know, not at some cheap free version, but a version that works correctly. Beautiful trade off the 9. You're on a green 4. I mean, according to the daily sequential, you're still bullish. And we'll see. And we'll see. So there you go. There's your Tesla analysis. So the honey badger is over. My next stop would be Bitcoin Wednesday. I think there is a meetup on Friday. I'll give you guys more info tomorrow. I haven't had time to deal with it. After that, I'll be in Prague. Jimmy and I will be doing a carnivory dinner in Prague. I don't know how many tickets there are left. I think the price is about to go up. Maybe tomorrow, go ahead and register for the carnivory dinner. It'll take place October 7th at a Brazilian barbecue. Should be awesome. It's one of the best parts of the conference. You know, you get to talk to other people in this industry that want to come to this private dinner. I think the maximum will be 50 people. Then I'll be in Kiev, Ukraine. and then Singapore, and then a month in Australia, and then Singapore again. So go ahead and check that out. And don't forget the workshops, guys. The Amsterdam workshop, well, I'll probably sell out both days. People are switching from Sunday to Saturday, so seats on Sunday start to open up. You still have time to register. Then Chiang Mai in Thailand, Singapore, Perth, Melbourne, and 2 in Sydney. I had to add a second day because I was selling out, and Brisbane, and maybe New Zealand. I got to make up my mind by end of this week. It's hard. I mean, this is work, guys. Everyone, it's manual registrations, guys. This is, you guys think, and I have a conference to plan. Conference will open for registration probably by October 1st for sure. The conference will be at the end of January in Vegas. Okay, I'll make the name and everything public soon. All right. Oh, I got a tip. I got 2 tips. I got a few tips. Wow. Let me go through these tip things. I don't want to turn my camera on only because well, I guess I could turn my camera on. I'm at the Bitfury office here in Riga. I didn't set up my camera in the right location, so it's lights bouncing off of a white wall plus a white shirt. And I need to travel with a professional cameraman. So because that's kind of annoying, I'm gonna simply, I'm gonna show the affiliate codes as I turn off the camera and go through a couple of tipped questions, and then I'm gonna call it a day. All right, let's see what we got. Apple descending triangle. I didn't see one. Let me go back to the Apple chart. I don't see it. It's not on weekly, that's for damn sure. Maybe daily. Yeah, I can see that. I can see a descending triangle on the daily. I probably shouldn't have deleted that. I can see a descending triangle on daily. I can see it. You had 1, 2, 3, and then starting plus 1 and 2. Yeah, I see it. What's the height? 216. Oh man, you got stuff in the way. 216, 229. Let's say $15. Looking for a $15 drop, going down to 200. Seems reasonable. All right, next. I'm only going through tip questions, guys, because they stand out as you see the live chat. Frank, thank you for your double tip. The RSI on a monthly chart, could you consider a divergence from February, March 2016 to the current month? Let's go take a look. Monthly RSI. Here's the monthly. Let's make it full screen. Yeah, it's gonna be tough to read. From what do you say? February, March 2016 to the current month. Well, you can't have a divergence to the current month, right? That's not what divergence is. So that you can't have divergence here from February, March 20. No, that's not how divergence works. Divergence works. I can't even show it to you here, right? Oh, wait, I'm sorry. Here to here. Yeah, okay, so I see. So what you're saying is the RSI has made a higher low, but again, that's not how divergence works. So please review the rules of divergence. So your RSI has to make a higher low and your price has to make a lower low. So unless February, March 2016, the price goes lower than it was, and in February, March of 2016, the price was like $500, right? Probably. It's even lower than that, right? So the price would literally need to be below that with a higher RSI, right? and it needs to reverse. So the entire premise of the concept is wrong. So you would need, you see how we had a higher high? You would need a lower RSI at the top to consider it to be divergence. Or you need a lower price with a higher RSI to consider it divergence. Also, the price has to fully reverse, and right now we're at the bottom of a triangle. So unfortunately, that's not how things work. And you have another one. Is using 730-50 moving averages better than using 730-50 exponential moving averages? It's not, one is not better than the other. I've always preferred simple moving averages in my trading to exponential moving averages in my trading, but other traders may disagree. Since I happen to see a non-tipped question, have I looked at the Ethereum longs versus shorts? It looks crazy. I have not, and I just don't feel like doing it right now. Next, Drew, thank you for your little donation. How do stock splits affect your TA? The stock splits are not supposed to affect the TA because your charts would automatically adjust all of the prices going backwards in time. I'm getting a lot of Telegram messages. Let me not screen share my Telegram account, but I am screen sharing, right? I mean, I better be. I don't know how old these messages are. Oh, am I not? Oh, I'm sorry. I'm not screen sharing now. My bad. My bad. That's what the messages are for. Yeah, one monitor. Yeah, you're right. I'm not screen sharing. Oh, well. Let me do that. Okay, now I'm screen sharing. My bad. So I think the Apple question I got, there was a, I don't remember actually when I wasn't screen sharing. So here's the monthly thing. Here's the RSI. Like this is not, there's no diverge. Like you can't even like, you have to reverse, right? Like you can start talking about divergence at this point here. There's no the concept of divergence doesn't make sense in the current environment. There is no divergence because it's by definition, there isn't any. It's not even subjective. It's just like the definitions don't match. The Apple triangle, I don't know if I showed it on camera, didn't show it on camera. I have it drawn somewhere. I don't know where my Apple chart is now. Silver, Apple, there's your Apple triangle. $15 drop from the triangle is very possible. So I didn't lose much without the camera, without the screen share, I mean. All right, let's see any other questions. Stock splits should not affect your stock. I'm not gonna look up AMRN, sorry, but stock splits should not affect your TA. Forget short long ratio. Bitcoin bottom is not in until perma bull cards are washed out, especially the ones calling you a fudster. Yeah, that's generally true, but it doesn't have to be true. Guys, I could be wrong. I could be wrong. We can bounce. I mean, the descending triangle on the weekly does not have to break down. It can break out. The rules on triangles are 70% of the time, this will break down. So 30% of the time, it will break out. If it breaks out, it's more violent to the upside. It reaches its target to the upside because the majority of the people preemptively short the triangle because they break down 70% of the time. So the smart traders wait for the breakdown of the triangle. The not so smart traders preemptively position, and smart traders with large positions preemptively position because they don't have the ability to go in after the breakdown. So if the triangle breaks to the opposite side, so many people get caught on the wrong side of the trade, they force it in the opposite direction faster and further. So I can be wrong. We can go up to new all-time highs in October. And I can say that, hey, the bear market has ended. I don't think that's going to happen, but it's possible. So yes, generally speaking, way too many people are bullish. And as long as people continue calling me an idiot, and as long as people continue to tell me how wrong I am, as long as more than 50% of the people disagree with me, I will continue to be a bear. The moment 60, 70% of the people start agreeing with me, I would need to flip my position and go against the majority of the people. That's what markets do, and I try to stay ahead of the markets as best I can. Let's see what else we got. I should probably end this in a few minutes. I'm just going over tipped questions, guys. Hey, you respect me by throwing in a tip. I'll respect you by looking at your question. Thank you so much for just a $1 tip, Drew. Thank you. You could have said something, but thank you. Google. I'm lazy pulling up another chart, guys. Let me see if I have a Google chart. Wow, I really don't have a Google chart. That's interesting and very unexpected. Wow, no kidding. I've never charted Google. Let me find Apple or Amazon or something. Wow. Didn't see that coming. Make a copy. Doesn't look good, does it? Here's Google. I don't have any moving averages set. You had a 9 at the top in January. You then hit a sequential 13 and a deferred sequential 13 off of that 9. Actually, that wasn't the deferred. The deferred was the prior 9. And you topped on a 13, which Wall Street loves. You're on a red 6 of 9. So, a few more weeks of downside and Google might do well. So I'm bearish Google at the moment. And the daily chart is neutral at best, but you did hit a 9 that didn't stick. Also a 13 at the top, and no trade on a daily. So there's your Google. Okay. Cool. All right, guys, I'm probably going to call it a day. Let me see if there's anything else that requires my attention. And it doesn't look like there is. I'm kind of curious where we're at with, I also don't want to dox anyone or anything. So I'm gonna go ahead and call it a day. Thank you very much for watching. Once again, please support this channel by using the affiliate codes, and space at the workshops is running out. So go ahead and register. All right, guys, thank you so much for watching, and see you all on the next one.